This is our What's New video for the new version 4.318, and unless you've traded with this, you won't realize the significance of how important this update is. For one, on the index is the dollar index, euro, pound, and now also have the weekly point of control. This shows you where most traders have positions in all the dollar pairs as a whole for the previous week, just like the daily volume area point of control is where most traders have positions in the dollar for the previous day. Also, as you notice on here, I tell you whether that point of control went up or down from the previous week, or in the weekly case from the 2 weeks ago. This is showing what the point of control was during the previous week, and during the previous week it fell 58 pips from the previous week. So last week, you know at a glance, the dollar went down last week. Yesterday it went up just slightly, and so if you were trading this looking to take dollar trades, you might have found the support here of the hourly and this breakout right here to be effective, this one right here, and you pretty much know that this is likely to be the high today of the dollar. It might double top there, pull back and shoot through there later, but this is a very high probability place to be looking for sells in the dollar. If you found a currency that was likely to go up at 8, you would, if the dollar's on top, sell the dollar versus that other pair, or if the dollar's on the bottom, let's say the euro is getting strong there, you would buy the dollar or the euro versus a dollar here at 8. And so it's very predictive. Again, this lets you, and you can on any of the indexes put any time frame you want. If you want to see a 30-minute time frame, you certainly can. That allows you to see more days past. You can spot, trend line breaks. You can spot Fibonacci areas. Oops. Spot Fibonacci areas on there, and you can see the 1.618. Very high probability area for the dollar to reverse earlier in the week. And of course, looking at the longer term chart, you clearly can see kind of levels on the chart, little wedges when it's getting tighter and tighter. You got a nice little breakout here, and so this was likely to go up, and it was likely to go up to the previous week's point of control, because it was down 58 pips from the previous week. And so that's what really helps you in trading. So let's take a look at some of the other ones. Euro index. You can see the point of control for yesterday is down 50 pips from the day before. So just without even going back in time, you automatically know that the euro was down for the previous day. And looking down the bottom, you can see the weekly and monthly trend is down. You have the euro really not able to get above its index's hourly moving average, and so when it breaks down, you might have gone short right here, and it took it about 20 minutes really to work. Your stop would have been above here, and boom, and it broke the previous day's low. You're looking to sell it on a pullback test right here. That one you probably would have lost money on. It went back above the previous day's low and then back down. You get short again here, and you're pretty much in this trade, and you have a nice little trend line. You stick with it until pretty much at 10. After 10, you look for buys, and frequently when trend lines get broken, they come down and retest it. It acts as support. It's resistance all the way down. Once it gets penetrated, it then becomes support, and you can see it goes up. If you're looking for sells, you might wait for that trend line there to get broken. But knowing, and let's go to the Swiss here, knowing at a glance the point of control was down 47 pips, significant. So obviously you're looking to sell this right here when it breaks down. You're looking to sell here when it goes back above the hourly and back down. You can short here, or if you're a little bit more conservative, you might want to wait for here, and you're good to go. And again, if you put a longer time frame chart on, you can oftentimes see the longer term levels right here. Last week, the point of control fell only 3 pips from the week before. Then this week is down considerably. So let's go to the CAD here. Last week it was down 29 pips. Yesterday it was up 17 pips. So as you're trading this today, you know that last week was a moderately down week, but yesterday was an up day, a decent sized up day. So you would have taken these breakouts above the previous day's high. And if you're trading this against a weak currency that's either going sideways or down, you're going to make money even on a small move like this. Here, 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 and then the last one. the reason we take every trade is we don't know if it's going to be a small profit or an astronomical one. So the last thing I'd like to show is the same technology of showing on the indexes how many pips each of them went up or down is also now on the individual charts as well. So I'll showcase that. You go and you add the FX value areas. You don't have to do anything else. And they will automatically show you over there on the left each of these levels and how many pips they went up or down. If they went down, it's underneath the line. If they went up, it's above the line. And I say down or up, and it's also a positive or negative number. So you know the point of control in the euro dollar fell 106 pips yesterday from the day before. The low fell 30 pips. And so when it can't get above this level today, it's pretty much a no-brainer place to go short. And of course, you're looking to go short here. And if you're smart, you're using our new Perfect Oscillator 2, which we released, I think, a few versions ago. This thing's amazing. You know, usually when it's at the minus 80 level, the market reverses. If it's beginning of a down move, it doesn't always reverse, but then the next time it hits an extreme, you're either going to get a sideways move or a nice reversal. And this can be used also to help you find trend trades. Once the market trends down, if you get a move up where it hits the upper Bollinger Band, again, as soon as that starts to poke down, you would go short right here, and you can see it fell from 95 all the way to 63. That's a nice 30-something pip move using the Perfect Oscillator. And of course, when it hits that the Bollinger Bands, you don't necessarily get short right away, but you're waiting for the price to break those lows. Or in this case, sometimes price goes up so slowly that the indicator goes sideways, and you just simply wait for the low of the trend lines off the lows of the bar to get broken. So you'd actually be short right here at this bar at 845. The low, when it breaks the trend line here at 79, and you can see it came down. Notice it's really close to the low extreme. It's at the lower Bollinger Band. It's telling you to get the hell out of the trade, and guess what? It goes sideways to up after that. So you better obey the Perfect Oscillator if you don't want to lose your money. Let's take a look at some of the other ones. Dollar CAD. This, you can see that while it was going up today, the point of control yesterday was down 22 pips. The lower value area, the value area low, was down 36 pips. So while it was trending up today, you have this very high probability counter trend short. But keep in mind that it's a counter trend on today's up move, but based on the last 2 days, it's actually a trend trade because, or actually the last 3 days, it's been going down. So you're actually trading with a longer term trend by getting short at the 1.382 FIB target. By quickly seeing the point of control or the lower value area, the upper value area, or the previous week's levels, knowing if they went up or down, you know for the previous day or previous week if it was an up day or up week or down day or a down week. Yesterday was a moderately down week, so this makes a very high probability place to sell. Let's take a look at a few more just so you can get a feel for how that this can help you. The value area yesterday fell 17 pips. The weekly value area of last week fell 81 pips. So, you know, basically, yesterday was a slight down day. Last week was a pretty decent down week. And so, if this market breaks a trend line, or you can see kind of a slightly lower low right here, it's definitely a confirmed sell when it breaks the low here or here. You got some nice, you know, trend trades down, because you know the last week and the last yesterday was a down day, even, you know, without having to go back and look at longer term charts. Let's do the pound dollar here. So last week it went up 224 pips. The point of control of last week, the lower value area fell 23 pips yesterday. The upper value area fell 44 pips. So last week was a big up week, but yesterday was a down day. And so if today the market can't get over the resistance here, what a great place to short. You probably wouldn't have shorted that. Just ignore this new price information you have here, obviously this is an uptrend. You might be afraid to get short right there, but knowing that yesterday was a pretty moderate size down day, and especially the upper value area fell 44 pips. That means basically it spent 68% of its trading activity yesterday between these two price levels. The low didn't fall that much, but the high did, and you can see the point of control is right near the low. It spent the majority of its time towards the low yesterday. So this is just kind of a counter trend up move today, and it's just a great place to sell. And when you saw it earlier today, really near the extreme plus 80, you might have gone short here and just kind of held. But myself personally, I would have gone short there and probably got out with a few 5-6 pips max, and got short again here and probably would have got out at this level. I wouldn't have expected it to break